Hello, this is Business Now, reaching you live from iBrandTV News Studio in Lagos, Nigeria. Coming up, federal government's total borrowing from the Central Bank of Nigeria rises by 96.54%. International Monetary Fund advises Nigeria and other developing countries to explore the revenue potential of personal income tax. Nigerians spend $39.6 billion on foreign education, medical tourism. And value-added tax revenue rises 33% to 2.07 trillion naira. Many thanks for joining us. I am Omobolanle Adeshuyi. An analyst has stated that the recent surge in the price of rice will slide the country into multidimensional poverty. Policy analyst Gamaliel Tanimomo, who spoke earlier in the day on iBrandTV's Business Breakfast, noted that to tackle the issue of food scarcity, Nigeria needs to stop being import-dependent. He, however, added that more people are profiting from the chaos.
This is another capitalism. We have more people, lesser people profiting from the chaos. And, Nigeria, a lot of people profit from the chaos in the country. I'm not sure Bakaliki rice is even available. That is to even know if they are there in the first place. So the next thing is people jump on the next available food, which is beans. And now beans is not even available again. People go for yam and all of that. So it just tells you that we are sliding into multi-dimensional poverty. And because the government has not provided a cushioning effect, what can be done? It is sad. So candidly, without being a pessimist, that scheme was doomed to fail from the start. Because if all we saw on TV was real, why are we experiencing this crisis? I mean, rumors have it that a lot of those things were brought in, shipped in, just because the president is coming, we want to save face and all of that. And of course, after that, because again, it's common sense. Economics is not rocket science. If we have such facilities in the country, why are we still importing rice? Or are we saying that the importation of rice is for some exclusive few? Who are these few? Who is backing them up? I mean, the question is what's happening to our borders? Why are we not opening our borders? So again, a lot of questions, too many questions, but I guess it's the president that's going to answer some of these questions.
A total of 116.46 million liters of premium motor spirit, popularly called petrol, valued at 18.8 billion naira, was stolen in 2021, according to data from different reports obtained from the Nigerian National Petroleum Company Limited. Figures contained in various Nnpc reports on product pipeline performance for PMS show that from January 2021 till December last year, huge volumes of petrol imported into Nigeria by the National Oil Company did not get to their targeted destinations. The products were lost through 4 pipeline segments, including Atlas Cove Musimi and Atlas Cove Idimo Satellite, Musimi Ibadan, Ibadan Ilorin, and Port Harcourt Aba. The ex-depot price of petrol, according to the sole importer of the commodity, Nnpc, was 143 naira 17 kobo per litre. This implies that the worth of petrol stolen in January 2021 was 943.9 million naira. A summation of the total volumes of PMS stolen during the 12-month period showed that the oil firm lost 116.46 million litres of petrol, valued at 18.8 billion naira. Nnpc has been the sole importer of petrol into Nigeria for about 4 years running. Other marketers of the commodity stopped importing petrol due to the hassles in obtaining foreign exchange for its imports. And the amount spent by the federal government through the Nigerian National Petroleum Company Limited as subsidy on premium motor spirit, popularly called petrol, in January and February this year is 430.165 billion naira. Nnpc disclosed this in its latest presentation to the Federation Account Allocation Committee meeting for March 2022, as it informed the meeting that it would deduct about 328 billion naira from what would be shared by FARC in April 2022. In the presentation, the National Oil Company described its subsidy spending as an under-recovery of PMS value shortfall. The development means state governments may sink deeper into financial crises, as there will be a lower amount to be shared by the federal government, state and local government at the monthly FARC meeting. The Nnpc stated that in January this year, the sum of 210.38 billion naira was used to subsidize petrol, while 219.78 billion naira was spent as subsidy in February. And the World Bank has stressed the need to boost labor output in Africa, stating that sluggish productivity growth is making the continent lag behind many developing nations. This was contained in a press release on the World Bank's website announcing the publication of a report titled, quote, "Boosting Productivity in Sub-Saharan Africa," end of quote. The bank urged that efforts should be made to direct resources to the most productive firms in the sector that hold the most promise for the continent. The World Bank chief economist for Africa, Al-Bazufak, was quoted as saying, "Continual and sustained increases in productivity are critical for ending poverty and improving prosperity in Africa." Given the host of global and local challenges confronting Africa, policymakers must ensure that precious resources are optimally allocated to sectors which are important for durable long-term growth that is inclusive, resilient, and sustainable. End of quote. The federal government's total borrowing from the Central Bank of Nigeria, CBN, through Ways and Means advances has risen by 96.54% or 8.92 trillion naira in 2 years, according to data collated from the CBN. It rose from 9.24 trillion naira as of January 2020 to 18.16 trillion naira as of January 2022, according to a year-on-year analysis. The 18.16 trillion naira owed by the federal government to the Apex Bank is not part of the country's total public debt stock, which stood at 39.56 trillion naira as of December 2021, according to the Debt Management Office. The public debt stock only includes the debt of the federal government of Nigeria, the 36 state government, and the Federal Capital Territory. Ways and Means Advances is a loan facility through which the CBN finances the government's budget shortfalls. According to Section 38 of the CBN Act 2007, the Apex Bank may grant temporary advances to the federal government with regard to temporary deficiency of budget revenue at such rate of interest as the bank may determine. And the International Monetary Fund, IMF, has advised Nigeria and other developing countries to explore the revenue potential of personal income tax. According to the IMF, personal income tax is a viable source of revenue that has the potential of boosting the local economy. It disclosed this in a report titled, "Personal Income Tax Has Untapped Potential in Poorer Countries." The Washington-based lender added that government aiming to achieve lasting economic recovery from the pandemic must focus on increasing their revenue source, and personal income tax, which is a tax levied on wages, salaries, and other income, offers that cushion. It said, quote, "In the 2 decades preceding the pandemic, income tax revenue more than doubled in low-income countries, rising from the equivalent of 1% of GDP to 2.1%, while emerging markets saw an increase from 2.1% to 3.1%. These were also reflected in the share of tax and overall tax intake, which went from 5% to 8% of total tax revenue in low-income countries and from 9% to 11% in emerging markets." End of quote. And Nigerians spent a total of $39.66 billion on foreign education and healthcare-related services between 2010 and 2020, according to the Central Bank of Nigeria data. The CBN's balance of payment, BOP, revealed that Nigerian parents and guardians paid about $28.65 billion for their words to study abroad during the period under review. The BOP report also showed that Nigerians paid $11.01 billion for healthcare-related services in foreign countries. The amount spent on these foreign services is almost equivalent to the current value of the country's foreign reserves, which stood at $39.51 billion as of March 23, highlighting its high cost. According to the report, the high cost of these services has drastically increased the demand for foreign exchange in the country, which has put a strain on the value of the naira to the dollar. The report recommended a strong production base that will enable the country to produce goods and services that the rest of the world will be willing to buy, which will in turn increase the supply of dollars into the Nigerian economy. And the Association of Bureau de Change Operators of Nigeria, ABCON, has solicited the Central Bank of Nigeria support in ensuring that Bureau de Change continue to sell dollars to retail and forex buyers. In a notice to its members nationwide, ABCON National Executive Council, NEC, appealed to the regulator to revisit the stoppage of dollar sales to BDCs to bring lasting stability to the naira. The group disagreed with claims that naira has remained largely stable and convergent following the stoppage of dollar allocation to BDCs. According to ABCON NEC, BDCs remain the most potent tool for the CBN to achieve its foreign exchange rate management. ABCON said the BDC subsector is not responsible for the naira exchange rate volatility. The naira exchanges at 416 naira 25 kobo to a dollar at the official market. However, at the parallel market, where the majority of forex is sourced by manufacturers and retail end users, the naira exchanges at 587 naira to the dollar, representing over 170 naira premium between both markets, the statement said. Total transactions by foreign portfolio investors in the stock market have risen by about 10%. The second consecutive increase as foreign investors continue to build up their Nigerian portfolios with increased transaction on the emerging market stocks. Foreign portfolio investment, FPIs, account for about a quarter of transactions at the market, almost a double of the previous participation level and one of the highest in recent period. Latest FPI report obtained at the weekend indicated that total transactions by FPI rose by 10% to 45.43 billion naira in February this year, the second consecutive increase and the second largest FPI transactions in 12 months. The report showed that while Nigerian investors who had rallied to sustain a boisterous market in the low period of FPIs appeared to be slowing down, foreign investors were keen on building further portfolios in the market. The balance of FPI flows remained the same, with almost corresponding increase in inflows and outflows and modest deficit. The FPI report, coordinated by the Nigeria Exchange, included transactions from nearly all custodians and capital market operators, and it is regarded as a credible measure of FPI trend. The report uses two key indicators, inflow and outflow, to gauge foreign investors' mood and participation in the stock market and the economy. And the National Bureau of Statistics, NBS, said the federal government generated 2.07 trillion naira as value-added tax last year. This represents a 33% year-on-year increase in VAT when compared to 1.55 trillion naira generated in 2020. Findings from the data in NBS's sectoral distribution of VAT report for fourth quarter of 2021, Q4 21, released at the weekend, showed that VAT stood at 512.2 billion naira in the first quarter of 2021 and fell by 3.16% to 496 billion naira in the second quarter of 2021. In the third quarter of 2021, VAT rose marginally by 0.88% to 500.4 billion naira and up by 12.6% to 563.7 billion naira in the fourth quarter of 2021. In terms of sectoral contributions, the top three largest shares in the fourth quarter of 2021 were manufacturing with 30.86%, information and communication with 18.72%, and mining and quarrying with 9.91%. Conversely, the activities of extraterritorial organizations and bodies recorded the least share with 0.02%, followed by activities of households as employers, undifferentiated goods and services producing activities of households for own use with 0.04%, water supply, sewage, waste management and remediation activities with 0.11%. However, on a year-on-year basis, VAT collections in the fourth quarter of 2021 increased by 23.98% from the fourth quarter of 2020. Still to come, $20 billion Africa-Russia trade at risk over crisis. Details on more news after this commercial break. Please stay with us.
Most people don't understand the magic of a perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution. And it's Blemiville Skincare and Spa. My name is Neil, and I'm proud to be a part of the Blemiville family.
And now to the Africa scene, where a report has shown that $20 billion yearly trade between Russia and Africa will be affected by the Russia-Ukraine war. Nigeria is, however, expected to increase its oil and gas exports to Europe following the raging war, which has resulted in sustained disruption to supplies from Russia. In a report to investors entitled "War in Ukraine Weighs on Africa Forex," AZA, a global forex dealer, said African countries, including Nigeria, Algeria, Tanzania, and Mozambique, could boost exports of gas and oil to Europe and other places during the war. Nigeria is a key LNG supplier to Europe, and last year's exports amounted to $12.63 billion cubic meters, BCM, according to data from S&P Global Platts Analytics. The biggest buyers were Spain with 49 cargoes supplied, or 4.3 BCM of gas equivalent, France 38 cargoes, Portugal 34 cargoes, and Turkey 15 cargoes, the data showed. Last year, several LNG cargoes were also dispatched, each to Croatia, Greece, Italy, the Netherlands, and the United Kingdom. And Qatar Fund for Development and the Bill and Melinda Gates Foundation have announced a new strategic partnership to tackle climate change across the African continent. The partnership, called NANMO, or Growing Together in Arabic, will see the two organizations invest in climate-adaptive agricultural tools and technologies to build resilient food systems and markets that provide nutrition, income, and economic opportunities to small-scale producers and their communities across the African continent. Specifically, the QFFD and the Gates Foundation jointly pledged about $200 million towards agriculture, climate resilience, and economic development projects to support smallholder farmers on dry land on the African continent. They made the pledge at the 2022 Doha Forum, according to a statement. Debt repayment will for the first time overtake the national government recurrent spending on items like civil servant salaries under President Uhuru Kenyatta's successor in the year starting July. Underlining the burden of mounting state borrowing, Treasury Chief project in the supplementary budget under parliamentary review that Kenya will spend 1.36 trillion shilling annually in the year starting July for debt repayment, up from 1.15 trillion shilling in the current fiscal period. The debt cost will, for the first time in Kenya's history, surpass the recurrent expenditure projected at 1.34 trillion shillings in the coming year from the current 1.27 trillion shillings. Kenya has ramped up borrowing under President Kenyatta's administration to build infrastructure, leading to a squeeze on its finances as the loans fall due amid criticism over the resulting debt burden. The debt binge is underlined by Eurobond offerings, a package of Chinese loans, and syndicated commercial loans in recent years. And now to the foreign scene, where the world's most valuable crypto has roared back to life with a stealth rally over the past 2 weeks that pushed it past the key level of $46,000 and puts it back in positive territory for the year. Although it was still within its extended trading range with $47,000 as its ceiling, Bitcoin was still firmly on long-term traders' radars as the weekly close drew near, which could easily be Bitcoin's best weekly close of the year so far. More than 16% higher since March 11, the crypto traded at about $47,000, above the upper limit of the $35,000 to $45,000 range since the beginning of the year. Following the fresh gains, the crypto has gained about 0.6% so far this year. And still on the Ukraine war, the war in Ukraine and Russia's effective exclusion from the global currency system could be an opportunity for China to raise the profile of its currency and a challenge to the US dollar, a senior Taiwanese security official said on Monday. Russia has said it is counting on China to help it withstand the blow to its economy from Western sanctions and will use Chinese yuan from its foreign exchange reserves after the sanctions blocked its access to its US dollars and euro reserves. Taking questions in Parliament, National Security Bureau Director General Cheng Ming-tong said China had always wanted a way to throw off the domination of the US dollar, and the war could boost the use of the yuan. Taiwan, which China claims as its own territory, has raised its security alert level since the war, wary of Beijing making a similar move against it. And Taiwanese officials have been studying the lessons both they and China could learn from the conflict. Behind the scenes, however, China is wary of its companies running afoul of sanctions and is pressing companies to tread carefully with investment in Russia, its second largest oil supplier and third largest gas provider. We'll go on a commercial break now, and when we return, it will be time to join Perpetua for the news now. Please stay with us.